Welcome to our podcast on timeless wealth building principles. This episode reveals why one should strive for equity compensation over salary increment and also covers related entrepreneurship and entrepreneurship principles.
You know what blows my mind? Ancient texts contain some of the earliest documented cases of employees successfully negotiating equity compensation. We're talking about wealth building strategies that predate modern stock options by thousands of years.
Hold on, are you saying someone actually pulled off an ancient version of modern equity compensation? That's fascinating.
Well, let me tell you about Jacob from the book of Genesis in the Holy Bible. He was essentially a C suite level employee managing his uncle Laban's agricultural empire. He was putting in 80-hour weeks, driving massive growth, but like many modern executives, he realized he was building someone else's wealth instead of his own.
Hmm, sounds like the classic golden handcuff situation we see in tech companies today.
Exactly right. And here's where it gets interesting. Instead of just asking for a raise like most people would, Jacob developed what we'd call today a proprietary methodology for livestock breeding. Think of it as an ancient patent that gave him unique market advantage.
So, he basically created his own IP portfolio before making any moves?
Right, and check this out. When he finally approached Laban, he didn't negotiate for higher compensation. Instead, he proposed what we'd now call a performance based equity arrangement, asking for specific livestock as startup capital. It's remarkably similar to modern executives negotiating for stock options instead of salary increases.
That's actually quite sophisticated, like a modern founder doing customer validation while still employed. How did he structure the deal?
Well, here's where Jacob showed real business acumen. He created what we'd now call a non compete friendly transition plan. He offered to continue managing Laban's operation while building his own portfolio, similar to how modern consultants might maintain relationships with former employers while scaling their own ventures.
You know, that reminds me of how Andy Grove transitioned within Intel, maintaining value while building something new. What kind of growth did Jacob achieve?
The metrics were impressive. He achieved what we'd call exponential growth. Using his specialized breeding techniques, his livestock portfolio grew at a rate that outpaced his former employers. We're talking about going from zero to market leader in his region.
That's like a modern startup achieving unicorn status. What would you say were the key strategic elements?
Looking at it through a modern lens, I see five crucial principles. First, develop proprietary methodology, your unique market advantage. Second, validate your model while employed, like modern MVP testing. Third, negotiate from a position of strength with proven results. Fourth, structure win win transition plans. And fifth, focus on equity over salary. Think ownership, not income.
Those principles sound remarkably similar to what we see in successful tech startups today.
And here's what's fascinating about the modern applications. Whether you're in tech, finance, or any scalable business, these principles of wealth creation remain constant. It's about creating systems and intellectual property that can generate wealth independently of your time input.
How would you suggest people start implementing these strategies in today's market?
Well, start by identifying your unique value proposition, what I call your modern day breeding technique. What insights or skills do you have that could be systematized and scaled? Then, like Jacob, test and validate while maintaining stability. The key is patience in building your advantage before making any major moves.
That's really practical advice for anyone looking to transition from employee to entrepreneur.
And remember, timing is crucial. Jacob waited until he had proven his methodology and built significant leverage. In today's terms, that might mean waiting until you've developed a proven track record or built a valuable network before making your move.
So it's really about strategic patience combined with methodical execution.
Exactly, and in today's rapidly changing business environment, having that kind of strategic approach to wealth creation is more important than ever. It's not about quick wins. It's about building sustainable advantages that can create lasting value.
Thanks for tuning into our podcast. You may download a glossary of the underlying financial concepts from Jacob's financial increase story to further sharpen your financial acumen using the link in the video description. Until next time, may you prosper and be in health.